ChatGPT Plus is free for college students through May. Here's the thing. You've got a lot to do between now and then. Studying for finals, writing papers, trying to keep your life on track, and ChatGPT can help with all of it. It can quiz you for your econ exam, make a study guide from your French notes, plan out your meals and study breaks. It can get really specific on how you like to learn. It can even help you come up with ways to stop procrastinating. So from now until summer break, take advantage of all the ways ChatGPT can make your life easier. Restrictions apply.
Ladies, you'll end up shopping for your guy's deodorant, right? So try Degree's Original Cool Rush. You see, last year, Degree changed the formula, and men were mad. One guy even started a petition. So Degree admitted they messed up and brought the Original Cool Rush scent back. It's clean, crisp, and actually smells like someone you want to cuddle. And it's in Walmart, Target, and other stores now for under $4. So toss one in your cart and find out why it's the best-selling men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory.
Hello and welcome to Fintech Insider Insights. I'm David Brear, Group CEO here at 11FS. Today we are joined by a real long-time friend of 11FS. I'll tell you some stories in a minute. Richard Davies, CEO of Allica Bank, who is on a mission to change the banking landscape by creating a financial institution specifically designed for establishment of small and medium enterprises. Since obtaining its banking license in late 2019 and making its first loan just as the COVID-19 hit in March 2020, Allica Bank has gone from strength to strength and regularly tops the lists of the fastest growing UK companies. Richard himself began his career at traditional banks, though, such as HSBC and Barclays, later moving to disruptive fintech unicorns such as Revolut and OakNorth, combining a past workplaces that's pretty vital. I mean, I was saying before the show, I don't think there's many people who have had as much of an impact on the SME market as Richard has. Unicorn status could be something that's just around the corner for Allica, and we'll see if I can tempt you, Richard, into talking about this one. But we'll be hearing more and more later on in the show about Richard, his career. But first, Richard, how are you doing?
Great, yeah, good to be here. It's good to be back.
Been a little while since we've had you on the show, but it's great to get you back in and talk about it a little bit more. I mean, for anybody who doesn't know your background, because I know you've been in and I've bigged you up here a little bit in terms of all of the things that you've done. But I joked before it. I saw on LinkedIn, somebody said there's not many people who have been present of all of these changes. And like I say, I mean, given your experience, maybe if I say about the first time we met each other, actually, you got me and Jason in the room, didn't you? And said, have you got really good producers on Fintech Insider, or do you actually know what you're talking about? I think I remember saying, I think we've got both. But yeah, tell us a little bit more about your career and, how have you got to where you got to?
Yeah, so I started life as a strategy consultant for my sins. Place called Allica Consulting, then moved into banking about 2004. And yeah, I spent most of a decade at Barclays, moved out of strategy into a sort of proper job running the Southeast SME region. And yeah, I've had kind of love for SMB stuff ever since then. Was lucky enough to be at the start of OakNorth, so was the inaugural CEO for OakNorth back in 2013. In fact, first employee in the door, working with Rishi and Joel, who've done some great things with that business since then. Went back to HSBC, was COO for the commercial bank there, then wound the clock on via Revolut, where I was COO at Revolut, came to Allica in middle of 2020.
Amazing. I mean, I've seen you sort of put out there saying the job you've got now is the best job you've had to date. The best, you look so happy with what you're doing, and actually, I mean, the impact that you guys are having as well in the market is amazing. Like, how's things going? Yeah,
I mean, it is super fun. If I'm put it briefly, I mean, I just love the job. Definitely best highlight of my career. I think that's been the case throughout since I joined. There's clearly difficult times and good times, and it's kind of lasted through both because I love this segment. So what we do is established SMBs. We tend to define it as like 5+ employees. I've also done micro business in the past, but we kind of felt this segment is the sort of last major untapped sort of opportunity by fintech in the UK market. And I think you are kind of contributing to UK economy, society by helping that segment. It's about a third of the economy, and just the sort of neglect for it from other banks and providers across the market sort of offends me, actually. So a chance to change that, and I guess also a chance to be sort of number one rather than sort of number two as I was in OakNorth and Revolut is quite fun.
Yeah. And I guess, how have you seen that transition between, obviously you've worked in, gigantic global organizations, and, you've worked in startups, I sort of loosely, I've worked in both of them, and, my experience in a big banking organization is sort of, you talk about things for 99% of the time, you're doing it 1% of the time, and startups, it's the flip, right? But that's fun, isn't it?
Yeah, 100%. I've become completely religious about sort of execution being everything, really. Listen, you do need a good, simple strategy, but then it is completely about execution. And yeah, sadly, in large organizations, it gets very hard to execute. You have, I guess, the classic problem of lots of different teams that all need to agree something and then all need to work on delivering it. And there's 1,000,001 different things you can work on. And it generally results in a lot of talk, as you say, not a lot of actual execution.
Yeah. And I guess particularly, my experience with a big transformation and all, particularly where you're talking about the technology side of things, because almost you spend more time trying to pull together the strategy than executing it. But technology plays a big part in that. And I know, when we've spoken to organizations that you've worked at, but also, players like Monzo and Starling and whatnot, being unleashed by that technology is a big deal, isn't it? Because I'd sort of say almost there are a lot of people who know the SME market, but as you say, sort of SMBs and technology and banking, and these are some pretty impressive conjoined triangles of success, right? to coin a Silicon Valley reference there.
Yeah, completely. I do think that sort of Venn diagram of people that do technology well and do SMB well and can run a bank is a very small group of people who have tried to collect Allica. So yeah, technology is so important. And you think about large organizations, one of the problems is you get so functionalized, and I'm massive preference for the sort of more service-aligned organizational model where, whatever you want to call them, single-threaded teams or squads or whatever, are working on a service, either external-facing or internal-facing, but they kind of own that, deliver that. And sure, there's a product guy and there's a designer and there's some engineers, but that's the unit of organization, rather than let's kind of have some stovepiped, sort of very large functions. Yeah.
Something that always comes through, from the first meeting to you is like you're passionate about this area. This isn't a job. To be honest with you, you've done it so consistently. This is not coincidence in terms of caring about it. But why do you think the SMB space is so underserved then in the market?
Yeah, so I think you look at, and this is not just banking. Actually, it applies across quite a lot of different large companies' routes to market. People tend to have a sort of a retail model or a enterprise or corporate model. And so the SME piece generally gets sort of stuck in between. Then you saw, which was great, from sort of 2017, the likes of Tide and Starling, Monzo push into that sort of micro business space, often on the back of a consumer model, because the consumer and the micro business are often one person and very similar. Which has improved that micro business payment space a lot. I think then you look at the segment up, which is a piece we focus on and viewed as being underserved still, was quite difficult because it really had quite a chunk of volume. So there's maybe 500,000 of those sort of companies in the UK. And they're quite complex. They look like some of the corporate features. They've got 3 legal entities and 4 directors and 2 shareholders. And when they borrow, it's secured on trucks or receivables or whatever. And so it looks a bit like the corporate, but with quite a lot of volume. And I think that's been the problem we've tried to set out to solve is how do you build a software and process that solves that complexity at scale?
Yeah, and like you say, that complexity, and I know, over a coffee, over a beer, we've had plenty of these conversations, but nobody starts a business to do business banking, right? So actually that complexity is almost, a problem to the people who are running those businesses, because it's not really what they're there to do, right? So how much of what you're doing with Allica now is about helping them manage that noise?
Yeah, so I think increasingly now, I think one of the big differences from micro business versus established business is what you see in micro business is people's very much embedding one service into the app. So you embed an accounting software, you allow people to create invoices from the app, etc. That's kind of less of a thing of established businesses, because if you've got 15 people or 30 people, you're generally getting more specialist software, and like that sort of fairly basic invoice creation thing in the app isn't going to work for you. You've often got quite specific sector-based software using, etc. So we are there's some areas I think like expense management, spend management that do generalize, which we are building. I think some other areas where you want to integrate things like payroll and accounting software. And so we sort of try and take a multi-pronged approach there as to, do we build or do we sort of try and provide best integration? Yeah,
it's a funny, as you say, it's almost as those businesses grow up, they need to be dealing with grown-ups, and actually that's a different sort of market, isn't it, in that sense? But yeah. I mean, as you say though, the SMB market, I mean, it's a third of the GDP of the country. That's this is not a niche we're talking about, right?
No, not at all. And actually, that third is just the established SMB market. The micro business is another sort of 15% on top. So SMBs in total are like half the economy. But yeah, this established piece, it is slightly weird that. And actually, people are starting to talk about it a lot more, which is great. We love that. Hopefully, we're playing some sort of role in that, because, yeah, it's actually bigger than the microbusiness segment. Yet most attention historically is focused on microbusiness.
Yeah, I guess that's just because it's simpler problems to fix to a certain degree. And as you say, I mean, it's interesting, those players that entered the market at that space have not matured as their businesses have matured, which actually, to your point, sort of leaves that gap for customers, doesn't it? But I kind of can't believe this, really. You've been at the CEO role now for 5 years. I feel like
flown by.
Yeah, it's like clicked a finger and it's disappeared. But what have you found most sort of interesting, or what have you found most surprising over that time period? What are you most proud of as well?
I'm proud of. I mean, clearly, it's been really nice to get the sort of fastest growth awards the last 12 months or so from Times and FT and whatever.
That's pretty cool.
It's pretty cool, right?
That must validation to the team and everything there. And I mean, that must make you really proud as well.
Yeah, because to be honest, you go back 2 years, no one really heard of us. And because of the segment you do, that's sort of the case, right? You're not, if you're a consumer brand or you're a micro brand, a lot of people are naturally hearing about you. So it was sort of, I actually wrote an email to the team when we kind of won the first one, which was the Deloitte Fast 50 in end of 23, actually. And I was like, this is sort of kind of quite nice recognition of all the hard work. The weekly, I'm pretty sure I said, but essentially this stuff is ultimately worth nothing, right? So don't get complacent, don't get on cruise control, right?
We're not done yet. Yeah.
Nice sort of, I don't know, take 30 seconds to reflect, but then back to executing, ultimately.
But I guess in that as well, you've sort of navigated pretty odd times, being at the helm of a business. And to your point, tempering positivity with optimism is often an interesting balancing act, isn't it? But, through COVID and, it seems like you guys have, and I guess, not putting words in your mouth here, but being able to be a bit more agile during that period and being able to look for those opportunities to support these businesses in it, that must have played a big part in ultimately your success, because you're only successful if you're helping your customers be successful.
Yeah, so I think I'll talk about COVID in a second, but I mean, actually we've had almost no strategy change at all over the 5 years. If you look at what we said, we raised some capital soon after I joined. What we said in that deck is basically what we've done, which I think comes down to the fact that myself and the team deeply understand the market and kind of knew what the long-term things that needed to be executed on were. I think COVID actually then helped because, for example, pre-COVID, only about 20% of SMB lending was done remotely or digitally. Clearly, during COVID lockdowns, it was 100%. And there was a hell of a lot of that done with the whole bounce back loans and CBILS schemes. So it sort of moved the propensity to do things more remotely, more digitally our way.
Yeah.
And also, I think, led to a bit of there was a period where actually the only loans most lenders were doing were government guaranteed. And at the time, actually, we decided not to do government guaranteed loans. It was kind of weird, right? Because if you were a business not impacted by COVID and growing, you were not eligible for a government guaranteed loan.
Mm-hmm.
And there were almost no lenders open for you.
Yeah.
So like the best businesses had no lenders. So that was kind of great for us, right? Because we were essentially the white knight. I remember us winning, so like end of 2020, we'd done, I don't know, 45 million quid of lending something, right? And we won the sort of lender of the year from the Commercial Finance Brokers Association, which the year before we were in Lloyd's. Just kind of crazy, right? But I think showed that fact that they really valued we'd come in and done this when everyone else was just doing government guaranteed loans.
Yeah, that must have been at that point, as you say, it's you win the award in a very short category, but actually by being there and being present. And I mean, because a lot of, again, working with this market is trust, right? You know, people want to work with trusted partners. That's how do you build that in this space for that type of SMB customer?
Yeah, I think it does take some time. I do think the people you have is important. So we are big believers that technology is super critical to solve that complexity times scale equation I mentioned earlier. But it's technology plus people, which I guess is quite a difference to consumer and micro, where it's pretty much about technology self-serve. So the people you have and you hire and how they sort of behave and interact with the market is I think really key in getting to that credibility quickly. But equally, it's what you do over the time frame. And I think ultimately, do people think you're with them, you're fighting for them, you're on their side. I think we've somehow managed to get that across to quite a lot of market participants that we are. We're different, right? And we do want to really champion the interests of small business.
Yeah, and I mean to the tune of, I mean, you're looking after 25,000 SMEs now. That's a big number in that market. I mean, again, all of them have got, you know, if you're running a cake shop or you're running a coffee shop or you're running a consultancy, whatever, like, yeah, all of these things have different requirements. So how are you managing to relate to all of the different types of people within that sphere? Because that's quite hard in itself, isn't it?
It is. And I guess I think there's a long way for us to go on this, a long way, particularly when it comes to digital experience and perhaps the potential to leverage AI for sort of hyper-personalization within that. So, I mean, to date, we've very much tried to build out capabilities that are usable by sort of the broadest section of the market possible. And sure, some may be more useful to a hospitality company than a manufacturer, but trying to really, I guess, the target's always been how do we be a complete replacement for a high street bank? And so we're not trying to focus on one particular niche. People, I think, can and has played quite a key role for us in that personalization. Like every current account we provide has a named account manager with it, which customers really value. And then we are starting to get into more, for some now, specific sectors and some specific integrations, trying to get quite a bit deeper. But I think we've got a long way further to go on that journey of personalization.
Yeah, it feels like you say, is if you're on that journey with your customers, then it's a very different approach to just shipping features and shipping capability. But have you seen, you know, you touched on obviously the swing of the pendulum from COVID to, yeah, digital's a thing, and you know it's the thing. It's not just a channel. So, but your emphasis of balancing that digital with sort of relationship based, human based, people based, you know, in our experience, even knowing you have it doesn't necessarily mean it becomes your primary channel of choice, but it means there's nothing hidden. There's an option. There's a safety net if you need it, right? So have you seen any sort of swing backs from in the way that we've seen, you know, maybe physical cash swing back a little bit and for different needs and different users, kind of a move a little bit away from the digital side? Or have you found once people have got comfortable with it that it becomes their primary, even though that they've got this relationship manager if they need it?
I think, I mean, it does depend. And we also offer a bit of a choice. So we have some field-based people. We have some remote-based people. So it does depend on the client, what they want. We're cool with that. I think in general, we are always pleasantly surprised by the amount or the lack of sort of, I guess, let's call more basic type inquiry stuff. So it tends to be, I guess, meaningful discussion. I guess no one finds it really productive, right? If they've got to constantly call up because I can't figure out how to do this.
This is broken, yeah.
Yeah, and so and then that's something we work quite hard on, right? Because that sort of feels just, it's a waste for the bank, it's a waste for the customer. Just make that stuff happen easily. Yeah. I wouldn't say I was saying a swing back, but it's equally quite hard to measure. I think the interesting question for us, right, is one of, with AI, given our proposition is very much technology and human relationship, to what degree do you use that in the customer interface is like a super interesting question when our brand is about the both.
Yeah.
So we're sort of pretty thoughtful on that right now.
It's interesting, isn't it, that overlap between people and, really what people are trying to find is confidence, isn't it? So actually it doesn't really matter if you can feel confident the response you're going to get from an organization does have the same brand values, the same, to your point, for their benefit, for their good. So it's going to be very interesting to see how that plays out. But I guess, talking of the technology side of things, it's, again, my experience working in a big bank, every 3 months we did a big release. We fired a lot of stuff out there into the market and we sort of saw what happened, saw what sticked. You guys are doing releases, what was it, 3,500 releases in 2024? I mean, that's a tech business approach to small incremental changes. So are you finding almost the market fit with those services in an organization such as yours? It's a very different model to a big bank, right?
Yeah, it is. I mean, I think kind of number of releases is kind of a vanity metric, right? The reason we care about it is just because we hire people from all walks, right? Some do come in with, and they've worked at XYZ Bank, and they kind of have the traditional view, and sort of, it's almost like for us a hygiene measure of, and literally for each of our squads, you must be releasing kind of at least every couple of days, absolute minimum. That's sort of like the hygiene level, right? Yeah. So it sort of tries to ensure the point you make that small, frequent releases are much lower risk and get your feedback quicker. So, technology is definitely absolutely core to us. We've had to work really hard to build up our sort of team, infrastructure, ways of working. With AI now, we're sort of thinking about how does that change again.
That must have a big impact on culture as well, though. And I mean this in a really positive way. Is often again, I sound like in this interview slightly like I've got PTSD of my time working in a big bank, but the tunnel for getting things live is so long that almost keeping everybody focused on where we're going was a big challenge. Actually, if you're constantly solving problems for your customers, that's that sort of, it lives and breathes your brand values in a real way. It's not just marketing; you're doing it day in and day out, right?
Yeah, I think that's totally fair. I mean, if you think about our current account product, we sort of launched it 2 years ago, and it was pretty basic back then. But we did have some customers start using it as a fairly primary account. Often the feedback I get from them is that we love the fact that stuff keeps getting added. It's like, I raised this thing and 2 months later there it was. And I think if you do see that rate of progress, people forgive a lot with the initial version perhaps being basic. But now it's well beyond that. Now it's in pretty good shape, and it allows you to go into, I think, to that earlier point about complexity and scale. I think the current account is one of the really interesting and hard cases of that, because the whole sort of piece of how you do workflow, permissions, roles becomes super key. I mean, having worked in some of the major banks and having colleagues who've worked in other ones, the classic thing is there's this corporate banking software, and actually it has incredibly rich functionality. But then the SMBs that are on it, the amount of actually using, say, the permissions is like 10%. Because it's way too scary and hard to navigate and use, even though it can do anything you want. Yeah. And then if you go to the retail bank, right, they have none of that functionality. So it's that design problem of how do you how do you build it so it's the customer doesn't need it? Yeah. It's not a pudding. The customer needs something quite advanced. They can kind of navigate through to it fairly easily. It's I think that sort of stuff is really, really valuable in a segment.
Yeah, and I know you touched on this a little bit, but the balance there between the problems a business with 5 people has versus a business with 250 people, like that's a very broad church of problems, isn't it? And actually having that experience, having people with those experiences serving all of those different scales of businesses is, my experience building something from that to that. It's like actually the problems you face into are so dramatically different. It's like climbing Everest. Each one of them is a little base camp as you're going, But how do you balance that, and how do you be their partner all the way through that? AI is a good example of an opportunity to do that from a technology perspective, but how do you sort of balance that capability for everybody?
Yeah, it's a super great point, right? And that's the problem that's where the complexity comes from, because the 250-person business is clearly very different to the 5-person. But equally, there is that sector thing, right, where the house builder is very different to the logistics company.
Yeah.
So it's I think that's where the more you can build your software, be it staff facing or customer facing, to handle the complexity, but to have it very easily navigable. So if you're the 5-person business, you probably just want a bunch of default stuff that just kind of works, right? Whereas a 250-person will almost certainly need quite a bit of quite funky stuff. So I don't know, might well want a payment approved that someone initiates and two different people approve it, right, before it goes out. Or privacy around payroll data, all sorts of stuff. And the same applies when you get to lending products. So it's ultimately why we built our own software rather than getting anything from third parties, because we don't think anyone's ever built any software that really works for this segment specifically.
Yeah. If they had, the problem would be solved already, and it's very much definitely not. I guess something to touch on from a brand perspective as well, how you get that right for the sort of building that trust, building that connection with all of those people. You guys have recently, I think it was back in March, which again feels like a lifetime ago now, but the brand has evolved quite a lot. Talk us through that, and what's the aims with that brand?
Yeah, so I guess we initially had sort of orange shield, a blue kind of background with some main colours and logo, which was kind of fine, cool. Then about 18 months ago, we had never done actually real brand campaign, brand work. So we started having a look at it. And this is kind of where you benefit then from having the right investors. So TCV, the Silicon Valley Growth Funds, invested us in 22. So one of their sort of operating advisors is the ex-CMO of Netflix. So kind of for free, he came and did a bunch of workshops with us. And
amazing. They know what they're doing. Yeah.
Done okay, I guess. Yeah. And just kind of kicked around how we might think about this. And then anyway, the kind of marketing campaign team sort of brought together some ideas with a third-party agency and shortlisted some stuff. Anyway, we ended up picking one of those. We kind of launched it as sort of almost a marketing campaign. It wasn't a rebrand. We didn't change anything else. But the one we went with, which by the way I didn't vote for, so I always say my own views on kind of brand are quite poor. But
well done for saying that and not just being it was my idea. And
no. I admit what I'm pretty crap at. So fortunately, everyone ignored my opinion and went with the kind of orange bowler hat one, which just really kind of took off. I think the same sort of, listen, clearly smaller volume, but same sort of way you saw kind of Monzo's hot coral card thing take off in like 17, 18. I remember this event about like 3 weeks after we decided to go with it. It was like this Entrepreneurs Awards evening, and someone had the nice idea of sticking basically lollipop sticks with a sort of photo of a orange bowler hat on, that you could kind of do photos for Instagram by putting it in kind of, if you do it here, it looks like it's on your head. And these being posted all over like LinkedIn and Facebook and stuff by the sort of 1,500 people that attended that. I was like, it's all right. And then
I take it back. I was wrong. Yeah.
Then you have like accountancy events where you got accountants sticking the thing on, and it just seems to have like really captured, I guess. And actually, I think the original spirit of it was like business owners wear many hats, and clearly it's like also bowler hats, a kind of banking thing. But Orange is pretty obviously not a traditional bank. So I think it's kind of, particularly the sort of not a traditional bank, kind of friendly but still a bank is come across really well.
Yeah, no, it definitely has. Like you say, there's a consistent sort of engagement with it, and that balance between the traditional sort of nod to what banking was and actually and the technology and the modern nature of it. But I think that sort of comes through with everything that you're doing, whether it's the sort of written communication and I said to you this before this is like, to be honest, it feels so you. Like, actually, it feels like quite informal, but very knowledgeable, and you've got that experience. So, that's nice to sort of feel. And like I say, with having been there for 5 years now, this is home, right?
Yeah, very much. Yeah, it's kind of definitely my baby. So I think a lot of people feel that way, have been there a while, and I think that's why it resonated very well with the staff as well, because it felt very authentic. And then if it feels authentic, they really sort of go with it, right? They're sort of out there loving it, promoting it, living it. And so, no, I think you're right. You can get that kind of brand to be super in tune with the internal culture, then that's great. I remember that Kelly, the guy who was ex-Netflix CMO, the sort of thought-provoking question he asked us in the sessions to answer was kind of like, what would people say about you, as in people at Allica, at a dinner party? What would people say about you in a tweet, right? And like, so how do you kind of distill that down? And it is kind of that thinking of what's the reality of this thing, and how do we translate that into something that's a brand symbol? Yeah,
exciting. Well, that's really good. All right, we're going to take a real quick break. We'll be back to you really soon.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Allica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
The rural way of life is about making everyone feel at home. Tractor Supply chose advanced 5G solutions from T-Mobile for Business to transform intelligent customer service. Together, we put the power of AI to work across 2,200 stores, keeping things running seamlessly inside, curbside, and countryside. This is elevated customer experience. This is Tractor Supply with T-Mobile for Business. Take your business further at T-Mobile.com/now.
Welcome back to Fintech Insider Insights, where I'm in a really great conversation with the UK CEO of Allica Bank, Richard Davies. Before the break, we were exploring the incredible growth that Allica Bank has had over the last 5 years, from first loan back in 2020 during the pandemic to serving over 25,000 UK SMEs. Now, let's dive a little bit more into where you guys want to go to. I mean, obviously, the last 5 years we've said has gone by in a bit of a flash, but we're looking forward, crystal ball. You've got the ability to execute from a technology perspective. You can take this in any direction. Where are you going, Rich? What's on the agenda?
Yeah, so I'm always a big believer that you kind of got to think step by step, no more than probably a few months, maybe a year ahead. I used to play a lot of cricket, and if you kind of get to the crease as a batsman and you're like, I'm going to score a century, that's not a great mindset, right? It's like, hey, I want to get off the mark, then get to 10, 20, 30. And so big believer in that kind of incremental, keep just knocking off the milestones.
I guess on that then, you've surpassed 10, you've surpassed 20, you're nearly at 30. You've was it 86% increase in profits, so $29.9 million. That's you're nearly at that 30 mark. That's pretty impressive.
I think we're in the 30s. Yeah, in a cricket analogy, we're probably scored about 30 odd runs. That's probably about right. So yeah, if we want to sort of feel we've played a blinder. We've still got quite a long way to go, right? If kind of think forwards, right, that probably the maximum I allow myself to think is a couple of years. And the aim is to be 10% penetration of the market in 27, which is higher than our current plan, but we hopefully have a sort of trajectory towards. And I guess that's quite important to me because I really do want to help transform this market. And I think once you get to that sort of scale, you really do start to make everyone else sit up and pay attention and invest, right? You've seen it in the consumer sector with Revolut, Monzo, Starling, and billions being spent to try and improve and defend against those guys. And we'd love to see something similar happen in this segment. So that's kind of perhaps my purpose-driven long-term aim. Both business-wise and for that purpose aim, sort of having a 10% plus share by 27 would be a pretty cool step. But then you sort of wind back to this current year and you're looking at just how do you execute across what now is 10, 12 product range kind of constantly. And then you're also thinking, do you add more beyond that, right? And it's always that balance of keeping yourself essentially at 100% capacity. If you start going to like 140% capacity, everything starts to break
at the sides, yeah.
But equally, you don't want to be kind of in cruise control at 70% capacity.
I agree. So what on that then is the challenge? Because obviously, I mean, we touched on this in the first part of the show, the problems of a 5-person business versus a 250-person business is different. So in that, touching on what you just said, I mean, it's not just more of the same and scale. It's like you're fundamentally solving different problems for different people in that group as well, right?
Yeah, and that's, I mean, if I just give a sort of market and product based example. So we published some research 2 weeks ago now, essentially calling for the need for kind of a control, alt, delete and forced restart of some aspects of the SME finance market in the UK, which I'm trying to influence government on, because I think it's actually really sad, right? From the 80s and 90s to where we are now, we did this piece of work, and that's sort of what I call kind of productive credit, where there's no like property or trucks, or where it's no kind of real collateral. It's just like evaporated from where it was in the 80s and 90s. And business appetite for borrow has also evaporated. I think there's kind of we've reached this kind of low risk equilibrium where demand's low and supply's low, and everyone thinks okay, and it's not okay, right?
What do you think has driven that then? Because obviously, as you say, there's different factors there. There's the governmental policy structure. There's entrepreneurs making. Entrepreneurs didn't exist in the 80s, so they were just businessmen and women making business. So do you think there's a changing mindset that in terms of either people, you're either swinging for the fences or you're not building a business? Is that?
Yeah, so I think our culture is risk off, be that lender side, be it business owner side, unfortunately, in general. I think various causes, right? So there's been a shift in the economy towards service sectors which tend to have less collateral. So it was a bit easier in the 80s, right, for lenders because there was more collateral. I think things like reg change, accounting change, like IFRS 9 has also driven a shift towards only go after well-collateralized lending. I think from the borrower appetite point of view, there was a lot of scandal around the financial crisis of restructuring issues, interest rate hedging, mis-selling issues, a lot of bad news, right? That essentially the takeaway was, don't borrow, it's scary. They'll come and screw you. And various other factors beyond that, right? I do think actually the business model changed to have less local relationship managers, has also not helped, right? Because who do you go to? So a whole range of factors, but it does feel like there's a very significant problem. We estimate it about £65 billion of credit gap, primarily in less well collateralized growth finance and working capital finance. And so kind of then, so what do I try and do about that? For example, overdraft, right? We have a product which we have for a little while, but it's a product that's been less invested in, let's say, compared to other ones. So we put a dedicated squad on it sort of late last year, and we did this work, and I mean, my God, that needs to happen, because that blows me away, the stat, right? But in 2000, there was £18 billion of small business overdrafts, 1.8 billion.
Wow.
Last year, 2.7 billion. So it's an 86% fall in small business overdrafts in 25 years.
Wow.
Right? Just catastrophic removal of working capital finance from the SME sector.
And that cash flow for businesses and managing that through, it's, So that's a lifeline sort of moved away then, isn't it?
Yeah, and listen, there's been a bit of substitution with some of the sort of non-bank fintechs, but you add them up, it's maybe 2 billion.
Yeah.
So there's still kind of a missing, 13 odd billion. It's sort of then back to us, right? How do you execute product to help solve that? Is how I think about that. And clearly we've got a whole bunch of other products. So it's then back to that parallel execution problem of how do you want to do overdraft, we want to do some cash flow based term finance as well, but we're also still growing a whole bunch of other stuff. Current account, cards, spend management, savings, commercial mortgages, asset finance, etc. Right? So it comes back to that point of how do you create the organizational structure, ways of working, infrastructure to support kind of, we've got 21 squads currently working, and just that working well in parallel to execute across what is now quite a complex business our side.
Yeah. That it feels like that's never going to be done then, doesn't it? This isn't a project. This isn't a set number of features and you build a bunch of things and you've solved that problem. The complexities for SMBs changes as the market shifts, whether it's a different president in one country or, and that effect that ripples out to globally or local legislation. You must stay really close to your customers and pulling them into helping develop out the pipeline for these things, right? This isn't just good ideas you have at a whiteboard. This is, I guess, through talking to your consumers pretty regularly.
Yeah, 100%. And I think that's one of the good news, right? Is because it's fairly personal. If customers got something they want, they will tell someone about it. And so we try and collect that feedback and very much use it to prioritize roadmap for each of the squads, right? So there's no kind of, I know some companies, fintech companies, are successful operating with the sort of spider at the center of the web that sort of determines the roadmap. We kind of very much try and decentralize it into each squad, right? To get the feedback and work out what's the next most valuable thing to do.
Yeah, and I guess with that though, that's a lot of these points that we're talking about in terms of the things that you do for your customer actually have pretty major impacts when I think about the way that the business is run from a cultural perspective. And I don't want to keep just sort of coming back to the point you made about the branding bit of, you thought one thing, but, the team thought something else, and the structure, dissemination of power to the edges is a difficult thing to do from a control and, dictatorial, I don't get any of that from you at all. How does that work at scale?
Yeah, I mean, also I don't particularly know.
It's how does the magic happen?
And it's there's certainly, I mean, when I think I have a very good experience and logical view on something, I will quite happily say we're doing this, right? Because I think that speed of decision making is a absolutely central attribute to a successful company. So yeah, if sort of I'm very clear on what should happen, I will. Yeah, so it's not like I'm just hey, you guys knock yourselves out.
Sure.
It's about the balance, isn't it? And it's about, I think, ultimately self-awareness that you may know some things very well and other things less well. And so
I've got a similar approach. I find actually the times you actually have to do that are quite few and far between when you've got the right people, right? And one thing I definitely say, I mean, just through, looking at the hires and things, you pull together a really great team. It feels like actually that plays a major part in, almost it's a force multiplier, isn't it?
Yeah, 100%. I always remember one of the many lessons I got from Nick at Revolut was a sort of mindset that, look, you might well work on something personally quite intensively for 6 months. But then if in 12 months time you're still able to do that, something's gone very wrong, right? Because you're not scaling. It's like you may do something personally very strongly for a while, but you've got to make sure someone's hired that's then doing it thereafter, and you just have to kind of be far more helicopter supervision, right, than sort of in the weeds. And I think that's a really great way to think about how you scale, right? Ultimately about how do you get quality people that can essentially do the thing that you might have been doing quite personally beforehand.
Yeah. Get the plate spinning, but you need to hire great sticks and hire great plates to keep those things going. But I mean, it sounds like you've had an amazing 5 years. Fast forward, look at the next 5 years. What do you think you can do that tops that? Then is it amount of customers that you solve for? Is it I know the UK is looking at winky faces at everybody who wants to please stay and do IPO in the UK and all the. So what would be the biggest objective for success in goodness me 2030? Isn't that terrifying?
Long way. So ultimately for me, right, the single biggest thing is seeing the market dramatically improve. And playing a major role in that, right? Like if I want to be 10% in 27, then I don't know what number of 2030, right? But hopefully 15% or something or more, right? We would like to look at non-UK, but we're sort of trying to be quite humble about that. Let's be honest, most people have fucked that up, have done it. So trying to just make sure we think about it quite detailed way. How's that market different to us? Do we actually think we can succeed there before we place any bets? And who knows about sort of IPOs or liquidity events? I mean, probably at that time frame, yes. Though I'm a massive believer that try and build a great business, keep kind of go from 30 runs to 50 runs to 70 runs, right? And then people are interested in that business, right, and investing in it.
Well, to keep the metaphor going, you've smashed plenty of sixes, right? So you've done a great job so far. It's amazing to see the growth of the business, and as you say, it's amazing. Actually, so much was. The last 2 years has been so public, but actually that only happens through the 3 years before it, digging out the trenches and making these things. So amazing to see it successful. It's really looking forward to seeing what comes next. For everybody who wants to connect with you, Richard, like where can people learn a little bit more about all the good work you're doing at Allica and yourself as well? Yeah,
LinkedIn is definitely the best medium there.
Very good. As for me, you can find me on LinkedIn. We're going to have to wrap up, though. I know we could have gone on for another 50, another an hour on all the different subject matter and all the different cryptic metaphors. But thank you very much for listening, everybody. If you like what you've heard, follow the podcast. Don't forget to leave us a review. Really helps us make it better and helps other people find the show as well. As always, if you want to join the conversation, you can find us on pretty much every social media channel. Just search for 11FS or Fintech Insider or email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks, like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Allica Bank, who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.